I took a few days off. What did I miss? A lot. 75-point range overnight in the S&Ps. Trump inauguration. Apple downgrade. People sniffing around in Intel. Who would want Intel? Preview some Netflix earnings. Not much econ data this week, but I'm sure we'll have some volatility. Tommy Lackey Jr., 835. He'll bring a technical twist to the markets. Glad to be back here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's get it on the screen. The S&Ps moving around good. Almost an 80-point range overnight. We're up from Friday. Friday's close. We're up 22 handles, 60, 55, 50, getting back near those all-time highs. We have the dollar index trading down 69 cents at 108.51. TLT up nearly 50 cents, 87.64. The crude oil market not liking drill. USO down to $1.89 at 80.63. Gold and silver both getting a bounce. Gold up $2 or GLD up $2.04, 251.31. Silver ETF, that's up 11 cents, 31 cents, 21.92. And Bitcoin all over the map. Right now, that down at $730 at 104,550. Let's remove those charts. Let's bring on a Triple D and Christian. Still haven't coming up with a good nickname. Should we get the sports out of the way?
CF.
I don't like it.
EDD CFJE.
I know. I need.
All right. Christian's scared. I can just tell he's scared what Joel might come up with. I'm scared too. You never know what Joel's going to say. He's like halfway between reality and dream world half the time because of his age. So, the dementia there. Woo. You never know what he might come up with. Yep. Christian, how's the weekend? Long weekend.
Not bad. You guys mentioned sports. Yeah, I'm sorry about your Detroit Lions. I mean, what a shocker. What a great game, but I'm sorry, guys.
Not a great game.
I was looking forward to them. I was rooting for you guys, and it's a tough one. And
I was just, you're watching, and you just could feel it. The Commanders, offense is just on fire, and we were just turning the ball over. Like, it was just giving points away, and you can't do that with that offense. So we were in trouble. I mean, the turnovers just were killing us. So, I mean, it's very frustrating. We feel like real Lions fans again because we know this feeling of disappointment very well all year. I don't even know how to deal with the winning being 15-2. Just unbelievable. But you kind of just do. It was going to end badly, and obviously it did. So, Lions fans, I'm with you. All I know is disappointment. I haven't had one of my sports teams win in 30 years. It's actually since the Oilers won the Cup back in 1990. That's the last time I had one of my championship teams win. It's been 35 years since I've felt victory. So for the majority of my life, I've only known defeat.
With both those teams. So
what's that, Christian?
All right, enough of the whining. I just thought, well, a lot of turnovers. I thought they got too cute. I thought Ben Johnson got a little too cute with the offense and the passing and everything. I'm actually glad he's going to Chicago. I mean, I'm very happy for what he did. We lost, you don't want to use an injury card, but we lost the best player in the NFL on defense. Dan Campbell's a great coach. I'm not that. I'm more of a Michigan fan than I am anything else. I'm still bullish the Lions. And then just get the other thing out of the way. I got a lot of, you must be so upset Ohio State won the national championship. Not in the least. I am glad Ohio State won. I want them to go undefeated next year. They come into Ann Arbor, Michigan. It'll be 1 versus 2, and they're going to lose for the 5th year in a row. So there you go. I'm happy that Ohio State
set up. That's your sports summary. We're done with the sports talk. We're moving on to the Trump talk because it is all about Trump here today. Trump coin launches over the weekend to the tune. I don't even know how high I got. Like $30-40 billion market cap, just like that of this Trump coin. I don't think we can bring up a chart of it, but
No.
it was unbelievable, going 18 cents to like $76 in 24 hours or something. Every Trump supporter jumping in there and buying it. Then he launches his wife's coin as well, and it takes off. But then the Trump coin goes down, and holy, these coins, man, these meme coins. Christian, I know you were down and
Yeah,
dirty.
you were
buying some
trading it
Trump
too,
coins?
man.
I can't. There's no way. I was kind of looking just for curious sake, because you didn't know if there was going to be another one of these coins that were. I was waiting for the Baron coin, and none of these are on Coinbase to trade. At least I think they finally listed the Trump coin. Robinhood also listed the Trump coin as well, but you have to go to like other platforms where I don't have an account open, like Kraken. I asked this on Twitter because I thought it was just very interesting. And then also, once it is listed on Robinhood and some of these other places, I'm in New York and you can't trade any of these things in New York. So I'm learning. I don't really understand what the deal is, why if you're in New York, you can't trade any of these things. But I might hop across the border and trade some coins up there with you, Dennis.
Yeah, I don't trade any of this stuff. I don't know much about this stuff. People were asking me, are you investing in fart coin? No. Are you investing in Trump coin? No. I mean, I'm invested in Bitcoin, so I guess it's kind of the same thing. It's all just kind of investing in just the hopes and dreams that somebody's going to pay a higher price, because there's no cash flows. There's no real anything there. But I mean, I'm a lot more comfortable in Bitcoin, which is, known all around, as opposed to a coin that just got minted 3 days ago. And all, and the market cap just going up that high. Hard to say. I mean, I don't think the Trump coin goes away whatsoever. The fart coin's just a whole nother thing. I think it's got like a $2 billion market cap or something. Like, it's amazing that these things that just are complete, jokes when they're created can take off like that. And people put real money in the fart coin. I mean, that's maybe just where we're at.
I mean, everything's a trade, right? And if like you bet on football and you bet on sports, like it's kind of like the same thing. Like that's where I would kind of think about allocating money to these types of things. Is like, oh, it's a bet on, a bet on the playoffs over the weekend. It's not a lot. I would not be doing a lot of capital, but is it something to kind of mess around with on the weekend? Sure, whatever. But I heard this stat app too, Moonshot or something like that too. But it doesn't really matter. I don't think any of these things I can trade in New York. There must be some regulation that I'm not aware of. But hey, I'm learning different things as we go along.
I like trading stocks, and I like trading companies that I can analyze. I don't like trading just nothingness and hoping somebody else is going to pay a higher price just because the chart looks good. Again, that's just me. I've always stuck with stuff that feels safer. So I'll probably not be investing in Fartcoin anytime soon. Let's move to stuff that is safer here. And if you want to talk, and you were saying everything is a trade, Christian, apparently it is, because Apple getting 2 downgrades here today. But you know who else said they sold some stock? Guess who sold some stock? Who tweeted this morning and said they sold stock on Apple?
Warren.
No. Thick TV personalities that always say, they got their own saying, that you own Apple, you don't trade it.
Cramer.
Jim Cramer.
Wow.
He tweeted this morning that he has sold some Apple. And what I find very amusing is he's been on his show literally for the last 5 years saying, own Apple, don't trade it. Own Apple, don't trade it. Own Apple, don't trade it. Yet he sells some, obviously tells us after the fact here, tweets this morning that he has sold some, and maybe he's going to buy it lower when it comes back down, that he thinks they're going to miss it. He's going to get a chance to buy it lower. Isn't that what he always says don't do? I mean, don't try to time the market. Don't try to be a trader. Anyways, I don't mind the trade, Jim, because I have been an Apple bear here for a long time, wrongfully so. I will admit when I'm wrong. I've been a bearish Apple for a while here now. This move from 220 to 250, I did not participate in, for the simple reason is that I feel the valuation's insane for Apple. But again, charts don't matter, valuations don't matter when the story is hot. Unfortunately for Apple, the story has went ice cold here lately.
It has.
Yeah, and now you're getting downgrades and analyst hate, and now people are talking about the 32 times earnings for a company that hasn't grown revenue in 5 years. I mean, this has been a buyback story, and it's been a multiple expansion story. That story has cooled significantly here, and it's cooling this morning. So just to give you the news, and we'll get Christian's thoughts here. We have Apple getting downgraded multiple places downgraded at Jeffries to underweight, which is equivalent to sell, and also downgraded at Loop to hold. So 2 downgrades come in. Apple this morning is trading down $4 with the S&P trading higher. That's a significant move lower. It stands out like a sore thumb with all mega cap tech pretty much trading higher. Apple obviously not participating. Sorry for my nasally voice.
I mean, they're really hitting this thing with downgrades. They must have like got together over the weekend, these brokers, and said, "Hey, what should we do with Apple this weekend?" And so a couple of them coming down on them. But I will say this, some of these names that get these upgrades and downgrades, there's a little event that's coming for Apple on the 30th. Any guesses what that is?
Yep.
So you got earnings on the 30th. So that's what I think that this is going to kind of continue. Everybody's going to pile in here or pile down on Apple. But I think the lower that it goes for not just Apple, but some of these other big tech names, I think the easier the bar is to jump over for earnings.
Yeah, I think you're right. And we still don't know the setup. We know the Netflix setup, and maybe this is a good time to preview Netflix.
Well, I like to do some technicals on Apple.
Yeah, do your technicals, Apple, sure.
Yep. Well, first of all, just going back over the, looking at the monthly here in the long-term chart of Apple, people that made downgrades haven't done very well. Maybe at certain times.
Sure.
At certain times.
At all times.
Yeah.
Straight up, that chart on the right.
Yeah. So there's the monthly chart. So it's a bold move. Everyone's ganging up on them, going into earnings. I mean, everything you're saying is true about the valuation, but somehow they just come out and they beat earnings again or something. I'm looking at this 220 level. It's still $5 away. You're down $4.50. If I was super long term and or a short, I mean, that's the area, right? You gapped up above that area, you held it. So I'll see what, if it comes down to 220. The longer it holds 220 and doesn't breach 220, then, set a couple lows in the same area. This is a big break for the shorts here. So, the fundamentals speak to themselves. The trade high valuation getting picked on by the street. I would just say I would get really bearish Apple, or I would make this kind of move if I thought the market was going into the tank. It just seems like if the market just keeps doing okay, maybe Apple won't go back up to 260, but I just think it will get sucked along with the market. So
I mean, there's an argument against you there, though, Joel. Just in this case, is the QQQs are 2.5% from the highs, where Apple is now at 225 from 260.
Divergence, yeah.
35 points. We're 17, 18% off the highs. We're almost in bear market territory for Apple here, not far from it. So, I mean, there has been that divergence here. Question for Christian here, too, is can Apple be, because Apple's such a cash cow and such a safe haven, and, obviously it doesn't, have a huge yield or anything, but there's safety traders in here. Is this a rates play to a certain extent as well? Because when the TLT continues to go down, you wouldn't think of it because it doesn't have like a 4 or 5% dividend. I always, couple in the 4 or 5% dividend plays with the TLT, saying they trade like bonds. But it almost feels like Apple trades like a bond lately. Like it's just defensive. It's the kind of stock that when we're after growth, people aren't really jumping into as much now. And it's really moved with the TLT here in the last month.
Yeah, that's a great point that you bring up, because I do think it's somewhat rate sensitive, and it's more of a defensive name because they have so much cash on their balance sheet.
Yeah.
So when rates really start spiking up, which brings us to a good point with looking at what bonds are doing over the last week, they've actually been rallying and giving a really nice relief rally and expanding breadth and so forth, and that means a rotation out of Apple. So Apple's getting hit a little bit by that, just with the market dynamics, and then of course the downgrades. But yeah, that's exactly it. Like, I don't think you want to be in Apple if bonds continue to rally and rates go down.
So before we move on, maybe we should just talk, your thoughts here, Christian, on, the dollar, because obviously tariffs have been a concern here for the markets, and bringing it back to Trump. Tariffs have been a major concern here for the market, saying, some people say, even myself saying, they're potentially inflationary here. Well, on Inauguration Day, tariffs aren't coming in on day one. And I think you had a little relief sell-off in the US dollar because of that, and a little relief rally in the TLT because of that. Now he's talking about tariffs coming February 1st for Canada and Mexico. But what are your thoughts here, just, on the dollar and the TLT?
Yeah. I mean, I think these are two things to definitely watch going forward. And it seems like the market has priced in, with this stronger dollar, it seems like the market has priced in tariffs, and tariffs are coming. So the fact that you didn't so it's very important to just observe some of these things that happen, right? So day one, while the market was closed yesterday, dollar futures and bond futures are open, and dollar futures sold off pretty hard on that. And so again, it kind of just tells you that the market is pricing in that. And also, once it was announced that, okay, like they might go into effect for Mexico and for Canada, like boom, you saw an immediate knee-jerk reaction in terms of what the dollar was doing, and a
Right
little
here.
bit in rates. So definitely something to keep an
Okay.
eye on.
I think that I don't want to say zero. I'll say less than 5% chance that Trump enacts 25% tariffs on Canada and Mexico on February 1st.
What chance are you giving it?
25,
Less than 5.
Less than a
5.
5% chance.
Yeah.
I don't know. He just said it though. So what he says and what he does sometimes is two different things. I mean, it's bad news for Canada. 25%
Oh, it is.
tariffs
Oh,
come
it
in. Like,
is.
Canada's
It is.
already got struggles. Like, folks, like I'm up here in Canada, it's slow. Stuff is slow. Like my buddy who's in real estate here, stuff is not selling. Like there's certain pockets still selling, but the real estate market's been very slow for a long time. We know Canada's been lowering rates aggressively here, trying to pick it back up. The economy is definitely slower in Canada. So, I mean, all of a sudden, tariffs come at 25%. Canada's going, if we're not in a recession, we definitely will be after that. But do we get them? That's the whole thing. And the question is, too, even for China stocks, I mean, this is a big question, too. He didn't mention China yet, Christian, to your point you were making earlier. He mentioned Canada, mentioned Mexico specifically. Did not mention like a 25% tax going on China. Didn't even mention China yet. So I think you're seeing, the Alibaba pop, obviously pops and some of these other China names, a little bit of a relief pop here this morning. Does China get, a pass here? What are your thoughts?
Yeah, I mean, FXI is indicated up 1.1%, so not a huge move, but definitely like, hey, there was some thinking that there was going to be something announced, and to your point about like if they come to Canada or whatever country, is it going to be if this is going to be the main tariffs, or is it going to be tariffs on some small things that are going to be to kind of start off with, and it won't be that that cumbersome. So that's the other thing too. It's like, okay, tariffs on what?
Well, that's a good point too. What are they? We don't have even details on this. Are we just blanketing every single thing coming in? Are there going to be specific things we're going to put tariffs on? I mean, the market's got to wait for the details here. So we just don't know the details. But again, the Fed is being very conservative with their interest rate cuts because we need more clarity and they need more clarity on obviously where tariffs are going. What is going to be? Are we going to be, aggressive here? Is it going to be just on certain products? It's going to be interesting to see. But what I will say definitely is there is major headline risk from Trump. So you've got to just be watching the headlines, and on certain stocks, they're going to move. He obviously is a lot more vocal than other presidents. So he will say things just in an interview that's like, whoa, we didn't see that coming. So, I mean, we know Trump will continue to move markets. So just continue to monitor. Where's a good spot? Chat. Where's a good spot?
Wait, hold on, Dennis, hold on.
Tracker.
Do you want to see my my lie detector test on these tariffs? What stock? What one stock? And maybe I'm making too much emphasis being here in the Motor City. But what company could get hurt by tariffs? Like
General Motors.
Yeah. Okay. Let's see.
For sure.
Up 57 cents, took a dip. Street saying, yeah, right. Yeah, you're doing those kind of tariffs. That's my lie detector test.
But you could argue that since the inauguration, you could argue, Joel, inauguration day, this stock was $60. Not an election, not inauguration day, this happened, but the election day when we actually, he won. GM's been straight down since the election. like opposite of Tesla, the exact opposite chart. I mean, like what day was
That's
the election?
market effects, leaders to laggards. You said,
I think it's
yeah.
more there though. I think it's concern to your point, which is a fantastic point about tariffs coming in, and General Motors obviously making a lot of parts
Yep.
in Mexico. Really, taking it on the chin. I think there's a reason GM's trading 5-6 times earnings, and it's not just that we're all
Always
going to
has.
go
Yep.
electric vehicles, because actually, what Trump's saying is he's removing all that stuff. So that should be good for General Motors, because their focus isn't obviously on EVs. They have a division, but it's not as focused as some of these other companies. But when you look here at the overall chart, the performance since election day, I mean, this GM chart has been down a lot.
Yep, certainly has. It's trading up today. Do we want to? What else? Boy, do you want to go, Christian? You want to talk about oil and the energy sector? I mean, big run, tough talk, drill baby drill. Is this just a little USO? I know you've been looking at the XLE and some of these oil stocks in 2025. I mean, little bit of a haircut here, but a pullback and a major rally in 2025.
Yeah, I mean, the thing that you kind of have to remember too. So first, like in crude futures, I'm watching 79.52. That's the technical breakout level for me. Clearly, crude is down, and so is nat gas this morning, even though it's really cold out. But
So
but
cold.
so I don't. How cold is it over there in Michigan? I'm in Canada.
When Lisa took BB out, it was 2
Yeah, in the
with
single
a
digits.
-8 wind chill.
Yeah, we're almost the same up here at Georgia Bay. We're 7 with a -6 wind chill.
Yeah.
It feels better. Like you're outside for 30 seconds, feels like your face is freezing. It is cold.
So besides the weather, because yes, it's cold here too. Besides the weather, I think you also have to remember, going back to the first time when Trump was in office, when you increase supply, it's not exactly great for the underlying like the commodity goes down, and also like I don't think I'm going from recollection, but energy stocks were not a great performer the last time Trump was in office. So the more that you bring supply on, sometimes the more that these things, there's supply and the demand is kind of staying the same, and you need strong demand for crude and copper, which I also see is down this morning too. So I think that's going to be very interesting, and it's not always just like, oh, whatever president is bullish this particular group. It is about the supply.
It's been a run too here. Like one thing to consider is we've had a pretty big run in 2025, and especially on the XLE and especially on some of these beaten down oil names. It's been a pretty impressive move for Chevron. CVX went from 140 middle of December to 161. You're coming all into this old resistance here on CVX. So 164, 165. There's all kinds of Joel Elconin tops up here. I mean, hard to chase it at this point in time. And again, one thing to consider is, you often see these run-ups into the elections, into, everybody's excited, into inauguration day, everybody's excited. But sometimes you get a rug pull. And, sometimes you'll see some violent rug pulls on certain things here. So I'd just be cautious chasing some of these names here because they've had pretty big moves.
All right. Should we? I know people want to preview Netflix earnings. We'll do that after our special guest. Let's do that after our special guest, Tommy Lackey. But let's talk about Merger Monday, or the rumor mill here. Intel supposedly finding some suitors. Is this just yet another false rumor to try and salvage something out of Intel?
I think so. I don't think anybody's coming to buy. I know there was rumors, Qualcomm, Musk coming in here now. Rumors, social media grabs. This is the one thing about social media is they kind of, just these rumors seem to come out of nowhere. They start little pockets and then they keep going and they spread so quickly with social media here. Intel, huge pop obviously on Friday. Nice pop here again this morning, so it continues. Me and Joel still long a little bit of Intel, so I like the pop, but it's been just a disaster. I don't think I'm chasing it here for the simple reasons that I don't think there's a buyer coming.
What was the news on Friday? Was there news on?
No, that was rumors again. That was the rumors.
Okay, rumors.
That was the original rumors starting on Friday.
Too.
A chip?
Yeah, I think they said something about an AI chip or something like that, which initially gave it a bit of a pop. I saw some stat out on the Twitter sphere about Intel. There's always these stats. If you say like, oh, if you invested $10,000 in this company, over the last 10 years, and how much it would be up, like for example, like Nvidia or some other stock. Somebody said if you invested $10,000 in Intel like 20 years ago, you'd still have the same $10,000. So
It's been a
I'll
disaster.
stick with that, and I'll say I'm not touching it either.
Yeah, it's been a disaster. I've tried to call the turnaround in this unsuccessfully here and lost money because of it. Punished severely for trying to be a hero. If you're an Intel, it's the hero trade here still because this stock has just been a disaster. Maybe there's a turnaround here eventually. I know, I've got the long-term time horizon. I've been thinking, eventually it's going to turn around, but I'm averaged in for about $34 and it's just been a disaster.
This is such an easy setup. Dennis, I know you love easy setups, right?
Good.
Rumor mill, right? Oh, big day on Friday. Pre-market high 2260. If this thing doesn't get back up to 2260, doesn't take out 2260, go 23, 23 and a half, man, this thing is going to fade in the top of yesterday's range. You may be able to bring it in at 2162. So let's see if there's anything to it. They'll run with it. You don't hear a price. You hear three different companies. I'm not buying it. I'm not selling it. But if you own this thing, man, oh man, see if you get taken out at that pre-market high. A few earnings here.
Yeah. 3M.
Christian,
Start
yep,
3M.
3M.
Yeah.
Okay.
We got the
Well,
3M earnings report
well.
here. I'll just bring it up. So they reported earnings here of $1.68 versus $1.66 for the beat. 5.8 billion, 5.78 billion is beat. Guide slightly higher, 760 to 790. Estimates 778, so a little bit above that range, but good enough. I mean, the stock has just been destroyed. We know over the course of the last 10 years, really, since earplug, gate or whatever you want to call it. Stock's really struggled here, but it's starting to crawl its way back. It's starting to become interesting. I want to ask the Momo trader Christian, are you getting interested in this one at all? It's starting to get some momentum, but still ugly if you're looking long term.
I am, and I was going to just ask the chat too. We were doing this a little bit last week. What kind of pattern is that on Joel's bottom right chart? What kind of pattern is that you've got shaping up over the last year? Anybody have any guesses about the chart pattern?
Throw it into the chat.
Go to the chat.
Make it bigger. Make it bigger so we could see it.
Okay, bigger. I mean, it jumps right out to me, but.
Well, I'm just referring to the last, like since 2024. There's a couple, yeah, but I see it there we go, bull flag. That's what I'm looking at too. I like that pattern, and it's a longer term bull flag. Sometimes we look at bull flags in terms of, on the daily chart or something like that. So I actually did get in one of my portfolios.
Nice.
I snuck this into my portfolio last week because I really like the technical
ahead of the earnings. Do you often do that? Buy them ahead of the earnings?
What's that?
You often do that, like buy them ahead of the earnings?
Only
it's always
like
a risk.
I put this into my TTT my trend portfolio at 1%. So I won't do that with with a big position. But I just thought that this stock is ripe. It's very cheap in terms of looking at the rest of the group in terms of fundamentally. And I like that what it did on last quarter. It seems like it's a turnaround story and it's moving in the right direction.
What about Head and Shoulders bottom too? There is that a little bit of a stretch on the bottom right of the monthly chart too.
Yeah, absolutely.
Shoulder. This one, boy, man, I don't know if you were trading this in the pre-market, Dennis, but what a 140 level. All 3 monthly highs. Yes, 3 monthly highs in the same area. You busted through it. So I wouldn't be looking to sell this today, but longer term, boy, if it could come back and build a base here at 141, 142 area, couple monthly lows, you got to like it. This is the highest level that this is stock. If you want to target 151.96 back in January of 2022, that's another $4 away. This is maybe over the expected move. Let's talk to Chuck Schwab here. Sure. Trading up 322. on its earnings. Dennis, do you have them pulled up, or you want me
Yeah.
to pull them up?
Schwab earnings, $1.01 versus 91. Beat on the top line and the bottom line, 5.33 billion versus 5.19 billion. I have not seen any guidance come out here yet. Probably just getting into the call, so we know guidance can usually change things. So always have to be aware. If you haven't had the call yet, sometimes things do change. So far, so good for Chuck. You're coming up to a major point, though. I'm going to take your $80 level, Joel. Kind of that was where your support was back in December. Broke that. Old support sometimes becomes new resistance. So I'm going to say $80. A little bit of resistance here, but ahead of the call, it's always hard to call technicals ahead of a conference call.
You know, one guy on this show, I'm not sure who it was. It wasn't me or was it Dennis? I think had like some 60 calls.
I don't have those 60 calls anymore, so. I was just going to add to, covering the financials last week, and I agree with what Dennis was saying last week when we had the first round of the financials report, the JP Morgan and the Wells Fargo and so forth. And we were looking for okay, they had such a nice initial move that it would make sense to kind of be a little bit of the sell the news with the next round of financial earnings. But we've not gotten that. And if you look at, you could go through a couple of these charts, but Goldman, Morgan, JP Morgan, they're all breaking out. So, I mean, this is a group that is really hitting it on all cylinders. And you're not getting the move, Dennis, that we kind of thought that you might see a little bit of simmering and so forth. I'm just going to add one more, the name that I'm going to watch and may possibly play for earnings after the close today, which is Interactive Brokers.
Yeah.
Again, it just seems like they're all hitting right now. So no jinx. I'm not trying to jinx it, but that's what they've all been doing.
Screwed up when I moved to Interactive Brokers from Trade Trading. I should have bought the stock too. It's all my volume driving that thing. Just kidding. But I do put some volume in there. But I mean, I moved there in I'm losing track of years here now, Joel. I think it was beginning of 2023. No, 2022? When did I move? Maybe it was 2022. Anyway, stock was $50 or $60. Should have bought the damn thing. I mean, I've given them. There's nobody I pay more money to than Interactive Brokers. Should have bought that thing. At least get some of my money back, some of those commissions back. But holy crap, IBKR stock's been unbelievable.
Oh, what a great level too, man! This is a 10-star, 193.42. Your last 3 monthly highs all been in that area, so it looks like you're gonna kiss it today. Man, you had just a concentrated seller in that area back in November, and on the monthlies, obviously November, December, and January. So big level there for Interactive Brokers, doing good. So all right, was there another earnings? Let's do DHI real quick, and then we'll go to our esteemed guest, Tommy Lackey Jr. DHI up 5.10 following the NAR pre-market high 156. Now that does coincide with one daily. Now next daily high 157.33. Dennis, you want to make any comments on
just the earnings? 261 versus 244, 7.61 billion versus 7.08 billion. These home builders always seem to do well on earnings. It always seems like it's a bad bet to guess that the actual home builders are going to miss earnings. The guidance a little bit light actually here. It's kind of in the range. They were at 37 billion. They're 36 to 37.5 billion. So they're kind of shooting the range, but it's definitely not a raise guidance. It's just kind of there. I guess their wording is reiterate guidance. But the home builders really beat up. So I mean, relief trade here to Christian's point. The low bar coming in for these, was good because we've seen multiple home builders pop up on their earnings reports here now. You wonder if that doesn't set up for the tech too, which obviously we're going to preview here after we talk to Tommy Lackey.
Okay, let's do that. Let's do that right now. Getting back into the groove of things, and guest intro 1. There he is, Tommy Lackey. You all know him, founding partner and CIO at Relativity Capital Advisors, husband, dad, motorhead, and how you doing down there? What kind? You like hot rods? You like motorcycles? What kind of cars do you like?
Anything with an engine. It really doesn't matter in this area. But yes, I have a couple motorcycles, or actually one now. I have quite a few cars. Have a boat. So pretty much.
What's your favorite car? What's your favorite car?
Favorite one I have right now, I have a 72 K5 Blazer, one of the old full convertibles that's built and pretty fun. And my son right now, we're building a 1974 GMC Jimmy, which is another one of the full convertible Blazers
Fun.
for his. Hopefully we'll get it done by the time he gets out of school. But just that kind of stuff. Something other than this to do.
All right, Tommy, we got you set up to run the charts here, and you always send over a lot of good information. I'm going to add them to the stage here, and I'm going to let you take the wheel, and then we'll pepper you with some questions.
All right, perfect. And really the question is, I've heard y'all talk a lot, and I know y'all focus a little more on what's going on right now and today and all that. And that's my question is, what do y'all want to talk about? Y'all want to talk about short term or long term, kind of, or midterm? That's not long term because your choice. Okay, well, this is kind of midterm, and this just starts with a weekly chart of the one on the left is the SPY, one in the middle is the QQQ, and the one on the right is the IWM.
Well, it's bullish.
Yeah, it's pretty bullish. And RSI below it, they're all in RSI bull ranges. They all just put in positive reversals. It's hard to be too bearish when you look at that. And then we quickly drop down to the daily. And even on this last pullback, you can see that on the first two charts, they never broke that green line at the bottom, which is the 40 level, which is the differentiation between a bull and a bear range when you're talking about RSI. So in that scenario, the Russell broke it, yes, and that was a pretty precipitous drop there, as we continue to see with the Russell. Every time it seems to get its footing, someone comes out and takes its legs out. But that's just kind of where we've been, and I think that has a lot to do with there are probably some structural changes there to where with most IPOs coming out at above 20 billion, it's kind of hard to get a whole lot of liquidity down to small caps these days. So I'm not sure they're ever going to come back and be the big performers other than shorter term mean reversion type plays. So from that stance, we're looking at the QQQs and the SPY here on the left. And both of those are very constructive charts, basically just larger flags, however you want to call it, that are at the top of those ranges. Now, where we go from here is important, but at the same time, there's really the only negative right now that I'm feeling a lot of from people is the whole interest rate scenario because everybody wanted to go down faster. Now, there's a difference between traders and investors that wanted them to go down faster and the businesses out there that just want them stable. So there's a big deal with a lot of these businesses, a lot of these CEOs, a lot of the scenario outside of our day-to-day trading that are feeling much better just because they're not going up at a rapid pace anymore. You know, that velocity, as I talk about every time I get here, is really what's been the problem in the markets the last 4 or 5 years is not the movement of where we're going. It's how fast it's happened is what's hurt most people. And so I think in that realm, we're now in a position to where I think there's a lot of tailwinds that are coming up. I won't go into my long demographic speech, which we talked about a little bit last time, but I think that's going to be an underpinning of everything for over a decade from here. And so, yes, we can have hiccups. Yes, we can have stupid politicians, all of that. But between the demographics and also some of the tailwinds coming on the economic side for more stable interest rates, and a lot of these companies are feeling much better. And let's not forget, confidence runs this show most of the time. I think Druckenmiller said yesterday on CNBC that the CEOs they're talking about are sitting between relieved and giddy right now.
I saw that.
You got the guys with the purse strings on that kind of feeling, then there's going to be business done. Does it all work? Of course not. But we know which companies have great management out there. We have seen that during these tough times. They're probably going to continue to stay there as we move forward.
Yeah, Tommy, I just want to interject here real quick. It just seems like, the way it's been a choppy market this year, like you've had some nice dips, some nice rips. It just seems like we get to these points and like, you just like right now, yeah, there's buyers out there. Obviously, we're up 24 handles, but it just kind of feels when we, that like people are letting things go here more, selling into strength. And then you had that dip, I believe it was early last week. Do you think, we had back-to-back 20, going longer term here, back-to-back years at 20% gains. Could that be possible again?
Well, my favorite thing to see this year, if I could choose, which of course I can't, no one cares what I think, is that basically the S&P does somewhere around 8 to 10 and just freaks everybody out. but the rest of the markets do 15 to 20. And, y'all were talking about a good example earlier with 3M in a scenario to where that's a company that has a lot of solid products that a lot of other companies need, not want. They're at a very low PE. They're kind of turning around at this point. We all know that the Mag 7 or whatever you want to call them have not been the only players, but that's where a lot of the flow and a lot of the money has been going. So even if that just spreads out, you can have a very good year as opposed to it all being that concentrated. And that's going to pick up your mid caps. That's going to pick up your small caps, maybe in the short term from kind of a mean reversion. But then maybe we go back to that liquidity issue I was talking about with small caps. But, I call mid caps my S curve play, and they're kind of the middle of the S curve. So that's kind of the place I think in here, if we really do to get the economic boost and the confidence in more businesses going forward, I think your mid caps can really be a great place to concentrate.
Yeah, I think it's interesting too. The mid caps are actually outperforming year to date. I think last I checked, the mid caps are up like 4%, and the S&P is up 2%. So you got some really nice outperformance there for the mid caps, which is kind of different because everybody's looking at the small caps. So I like that, Tommy. Is there? I know that you also look at some individual names. You mentioned 3M. Is there anything else that stands out to you in that mid cap space? Well, mid caps, 3M is large, but sorry.
Well, I didn't pull as much mid cap right this second just to bring in. I wish I had done it that way. I was really looking from an overall view. Honestly, I think we'd be remiss if we skip really where a lot of the large caps are, because even if the mid caps, it spreads out and things like that. Wow, that's a terrible screen. Let me change this real quick to one we can actually.
There's a lot going on there.
There is a lot. That's one I do when I have a full screen. All right, we're not going to do it that way.
It's kind of fun to look at, though. It looks cool, like you're piling some rocket ship or something.
Well, in a big screen it works well. In a small screen it doesn't. But let's just pick out Google real quick. Look at Google. How do you not like that chart? The daily and the weeklies are both really pretty. They're right above that recent peak. They're consolidating a breakout, and Google's really one of the ones that's theoretically not been as in favor.
Valuation one of the cheapest, Tommy. I think last time I looked at 22 times.
And something that Howard Linson said years and years and years ago is if you ever had to own one company, it would be Google, because they're the biggest hedge fund in the world, because they have all the data. So they go in and buy all the companies before anybody else knows about them. So, there's some interesting sides to that kind of play out in there, but just looking at that one, but it's not just Google. We can go to Microsoft again. Yes, it's had our software I got out of around the end of the year after being in the fall, kind of moved back to semiconductors a little bit because I kind of felt that shift was starting to head back. And I still think that. But again, this is a chart that on this daily right here, is it acting beautifully on these big, filled candles? We don't like that necessarily. But at the same time, we move over here to the weekly. And is it doing really anything other than consolidating?
Yeah.
We're still in a bull range down here. And that's, I think, what's happened is we're seeing some spreading out. Confidence does that. Confidence going to move money into these other areas of the market, whether it be the RSP, which is the equal weight S&P, or whether it come on down to the mid caps, which again, from the mid cap standpoint, and I'll pull up MDY here real quick. Everybody always talks about small caps. Really, small cap value almost always outperforms small cap growth, just because small cap growth can be so hit or miss. In mid caps, that's really where you can get the growth aspect of it and lean towards growth, because they're past that stage of here today, gone tomorrow. And they're really hitting their stride once you get to that mid cap, unless they IPO'd at 40 billion. But on the normal markets that we've lived with forever, that's kind of where, and when I'm a good bit older than you guys, and maybe me and Joel.
Not that Joel.
Don't get carried away,
one
Tommy.
here by far.
But I go back and doing technicals back into the early 2000s and all that, and watching a lot more of the bifurcation. I would love to have a lot more bifurcation this year as money moves. And I think you're right. Dennis, you made a comment earlier in the show about with this administration, with this scenario, it can be time bombs or it can be tape bombs any particular time. But the fact of the matter is, if you know that company, usually that's going to be a big benefit to be able to take advantage of those, or at least take a risk assessed shot at those. And I think that's really what this last couple of weeks have been, is even on some of these small companies. You've watched Jensen say something or someone else say something, and whether it be quantum computers or something else, they're dropping 30, 40%. And then if you really do want to be the short-term trader, you've seen a lot of little setups popping back and getting back half to third of that pretty quickly. Things can get to that point where they get oversold to an extent that in this kind of market, the reflexive action is certainly worth playing. But I think longer term, you've got to give this newfound, I guess, confidence a little bit of time to play out. And I think that's really what we're starting to see, whether it be big guys or little guys. I mean, if I flip over here to another, and this is much more little guys probably, well, ABGO's in here. It's a great example. Look at that chart. I mean, that's a chart that just set up beautifully to keep going. Has it moved a tremendous amount on that weekly chart? Yeah. The daily chart still looks awesome. It's hard to argue if it breaks above these lines that it's not going to continue to move out.
It's hard to bet against tech, period. I mean, I just keep thinking like
We
AI,
always thought.
it's not going away. I mean, we're moving into more tech and more tech driven. I mean, tech on pullbacks is probably still a no-brainer, which maybe brings us to Apple, just to get your thoughts here. We started the show with Apple, getting multiple downgrades today. Jim Cramer says he sold some, which he says he never sells, Apple, and he's even said he sold some here this morning. What are your thoughts? Because this was a little more broken than some of the others. But again, it's Apple, and it's always hard to bet against Apple. What are your thoughts on this one?
I mean, you need to see something positive before you jump in here. I don't think this is the one you just tax the following night, but that positive can even be on a 65-minute chart or a 30-minute chart with your stop below a pattern that's inside there, knowing that you might have to take 2 or 3 shots before it takes. As long as you're tight, as long as you understand how to trade that kind of a mannerism and that kind of a playbook, then you can definitely do it. However, if you look over here on the right chart where I have it marked, about 220 looks like an area that could be a very viable area. I mean, I love the way Christian does his work with his different value areas and all that. I'm not as skilled at that, but that's kind of an area. If I just look at this consolidation right there around 220, where my MA bands are right down here, and these are from Andrew Cardwell's RSI work, rest in peace. But we pull down to that 220 area, which is another 4%. That's probably where I would be much more aggressive. But anywhere in here that I get a good shorter term reversal, Apple is definitely worth looking at and playing with. It's not going anywhere. It's just a matter of, is it going to be able to keep up with the current hot plays, which are AI, quantum, that kind of stuff. Mm-hmm. And to some extent, they're a little behind on that play. But to the other extent, again, they are a service company now. They are not a product company as much. And so most of their money is revenue and stuff like that.
I think also interesting, you do get the analysts, piling on that, and you've had a couple downgrades of late. And if you're like, oh yeah, Jeffries, they finally, this is just wait till Dan Ives comes on TV again in his fancy, nice looking outfits. It starts talking it up, or Gene Munster comes on CNBC. So do your homework, do your things, do the kind of things that the technicals or whatever you are using for your long-term analysis. But the analyst game is always a tricky one. Tommy, I mean, is there anything that could pull the rug out from this market? Very favorable administration. Everything looks rosy. Bonds are not telling you to run out. I mean, they're having a good day today. Is there something underneath the hood that has you a little bit, something you're keeping an eye on, a possible negative catalyst?
I mean, yeah, the charts. I mean, I don't really know what else to say other than that until the charts hit. But see, we saw that sell-off, and in that sell-off, we really did not see any follow-through once it broke those minor levels in the majors or anything like that. And again, you got to remember there's so many algos, there's so many larger plays out there to where they can run markets. I remember that was in the Disciplined Trader book where he talked in one of his scenarios about someone going in and just saying, I'm going to move this market kind of thing. And he does it. In that scenario, we know that can happen short term in these days with the amount of capital that's out there, running stops, running levels everybody's looking at, running that is so normal. And we all want to pinpoint it to that precision because now we have computers and charts and all that. But when I was learning charting back 20 something years ago, I remember most of the better guys out there were saying you got to give it at least 3 days or 3% after it breaks your support level. Does anybody give anything 3 days or 3% anymore?
That's a great
I mean,
point.
so it's not like it's that new that these things are overshooting and coming back. It's just that we've now, because we can all look at it every day, every second, we want precision that's not in the human psyche. And that's just not how markets work.
All right. Tommy Lackey, you guys know him. He's the founding partner and CIO over at Relativity Capital Advisors, doing a great job running the charts. Tommy, I know everyone enjoyed that. And we'll be dialing you up again real soon. Thanks, Tommy.
Awesome. Thanks for having me, guys. I really appreciate it. Good luck, everybody, on getting their year rolling well.
Thanks, Tommy.
Okay. All right. We are going to remove Tommy. We're going to remove his charts. We're going to put my charts up there and go to everyone's favorite political segment.
Yes.
What is Nancy Pelosi buying?
Ha! She's the goat. She's the goat. She bought a bunch of stuff. Christian, you can Christian covers this closely and looks at this close, so throw it to him.
Well, I thought the timing is so interesting, right? I mean, you got to kind of love the timing of this. It came out yesterday, and of course, she wasn't buying this stuff yesterday, but the filing was done yesterday, and you kind of have to remind yourself too that when these filings go out, it could be over the last couple weeks. But
Great point.
there's a couple interesting ones in there. I mean, the one that's moving the most, and it's one of the biggest gainers this morning, is TEM. This is a small AI type company. I tried trading this company I don't know, it was about a month ago or 2 months ago. It had probably a little bit longer than that, probably about 3 or 4 months to go, and it didn't really do much, and it's kind of and it broke its range. I think if you look at that range that Joel's got up there, and it broke around 45. Where's this thing trading pre-market now?
Oh boy, it's traded at
big time.
41.52, but Dennis tried to sell it at 45 and a quarter. It traded up to
Yeah, that would have
45.
been nice.
Yeah, 45 and a quarter. I mean, yeah, that's where it got all the way up to here. I would watch that. That's a good area. People, no, that's above that. The real no major resistance now. Pair of highs at 47.15, but man, you have some intermediate levels. If you're playing this for the same to go to the moon, make sure you get to 42 and a quarter and then 43.93. They were exceeded in the pre-market, but it's a relatively new stock, right? And it's got the AI in it.
Ooh, yeah, that AI. Once you got that AI in the ticker symbol, all those retail traders get antsy in their pantsy.
Then also, one of well, I'll go right to the next one I think is most interesting is the VST, which if you look at these stocks here this morning, these stocks right now are doing so well. The VST, all these things in this little power group, CEG, NRG got an upgrade this morning, but VST has been one of those names that has been so strong. So this is from what I read here in the filing that it's not even stock. Going YOLOs into the call options in VST, $1 million in Vista. I don't know what the expiration is, if anybody has it in the chat, but interesting. Not even stock, going long options, which is juiced, and what a strong stock. VST and CEG both up this morning are.
You know what?
It doesn't go away. This energy story is not going away. It's one thing to consider too. When these stocks get pullbacks, these are like tech companies now. Treat them, CEG and VST, as tech stocks. They're going to move with tech stocks. They're going to move in with NVIDIA. You see NVIDIA, getting stronger here again. You see the AI trade getting hot. These stocks are not going away. I know the valuations on some of them are stretched. It would have been nice, obviously, to be on them a year ago. But I think we treat them as tech stocks. They're probably going to continue to trade with tech and the AI story.
You know what I think is interesting, and maybe we can get Nancy on the show, is
Bring her on.
Yeah, because I would like to know her method of technical analysis, right? Because this is just buying straight, right? The C, just it's buying high and selling higher. And then you look at this TEM and, technically, that one's very weak. So a little bit diverse investing style. So are those the three? Has anyone done any long-term statistics on her trades? I know she like ate at
There's an
someone
ETF
brought.
that tracks her. There's a
Yeah.
Pelosi tracker ETF. Do
Really?
you know that one, Christian? What it is?
I don't
Let me
know.
go look.
Let's see if
Chat will
the
know it.
chat has it.
Pelosi ETF. There's a tracker. Nance.
Nance. There
NANC.
you
It's
go.
from our good friend Unusual Whales. NANC is the Pelosi tracker, and it tries to buy all the Pelosi stocks. Kind of looks like it's done pretty dang good. I'm bringing up NANC up from the last year, 25 to 39. What I guess just over a year or 14 months. Done pretty darn good. NANC, Joel. NANC.
Oh, NA. Oh, there is an actual.
Yeah, there's a
Oh,
ticker.
yeah.
Unusual Whales. Friend
Yeah.
of ours.
NMA.
NANC. Yeah.
It's up 28% over the last year.
Joel's
So
having trouble. NANC.
Oh,
Nance. Without the Y.
all right.
He's
There you
old.
go.
He's
What
old.
kind of
There it is.
volume?
That's the
Wow, what
Pelosi
kind of-
tracker.
Wow, look at that. Oh, big bump in volume too.
Look at that
And-
performance. Look at that little bottom rate chart.
Look at
It's been a
that.
good investment.
Yeah, holy
Shout out
mackerel.
Unusual Whales. You don't follow them. Great follow on Twitter.
We
I
know
think this
it's
is
her
good.
husband. We know it's her husband and not her. We know that. We know that. We'll have to get Paul Pelosi on if we can do that. Dennis, I'll put you in charge of that. 8:56 here. We're coming up on the final few minutes of
I
the
want to
show.
talk a few other things here.
Sure.
We're looking. One, the FTAI story is big.
Yes,
here
that's what I was going to
too.
go to.
Christian
Yep.
was going to mention this. He might as well take the lead on this one. This is, this was a stock that got hit last week on, which one was it? Muddy Waters?
yeah.
And now, all of a sudden, they got news here this morning too, Christian. Do you have that news?
So they came out this morning and they had not made a response because that was a couple days ago where Muddy Waters was out with this, and they basically came out and they said some positive, but obviously more negative. They said that they were kind of defending the stock. They said that they strongly disagree with the short report assertions, but they can't rule out the possibility that they might have to delay the 10K filing, cites potential time required for any review. Obviously, the stock getting hit on that. And it reminds me a bit of what we encountered with SMCI when they started to kind of question that. And that hasn't been resolved. And it kind of echoes that a bit that, hey, you bring up accounting issues and the company can't right away say, we're defending it and here's what we're doing. They're basically saying like this is going to take a long time, which to me, what do you guys think?
No, it's SMCI part 2. It feels just like that. PK, I completely agree. Obviously, the SMCI story still hasn't been resolved here. And, something Kramer always says, which I agree with too, accounting issues equals sell. When the company when the company comes out 2 days later and says, well, we're going to delay our 10K, it's like, oh my gosh. They may actually be right. You may not be able to, you may not be dotting the I's and crossing the T's there, all gap style. So, I mean, that's a major issue. And that's why you're seeing the stock really, really get hammered again this morning. We're right down almost to the lows. We actually are below the lows.
Right there, 91. This was
Muddy Waters D-Day when they came out with the report. So,
yeah.
Stock's getting hit hard.
Yeah, I mean, it's just if you go into the playbook of SMCI, I mean, what do you do? I mean, you can't stand in front of this thing. If you're a contrarian or you had a nice short on, well, look at just that, the SMCI. But if you are going back to that stock, what was it? FTAI.
Yeah.
You are below that former low of the move at 91.76, pre-market low. Dennis, 80.60. $10 off the low. $11 off the low. That kind of makes me go to the daily and say, oh, where do we stop in August? 86.75. If you're looking to pull something in, but you don't want to look for the pre-market low, 86.75, and then the pre-market low. Dennis, other topic you wanted to hit?
We promised a Netflix preview, but I just want to talk. People are asking what's wrong with Goldman, what's wrong with Morgan this morning. There were huge sell imbalances in here. I'm not even sure there's a story here. Goldman's got 127,000 to sell on the open. That's as big as I've ever seen at Goldman Sachs. So there's somebody dumping a huge amount of Goldman. Morgan Stanley, 454,000 shares to sell on the open. We get this data from the floor. It's your imbalance feed. You can subscribe to it. It's really expensive. You're going to try to subscribe to it on its own. 454,000 to sell. That's shares, folks. That's not dollars worth. So 127,000 shares are selling here this morning. Goldman Sachs geared for the open. Like, again, things can change. Maybe some institutional buyer comes in and says, I'll buy them. But right now, these stocks are trading a lot lower because these sell imbalances are enormous.
What a ridiculous order. What a ridiculous order.
Well, you don't know what they're, you
Yeah.
know, you don't know the why behind it. But again, if you're an institutional trader and you're trying to just dump 128,000 shares in the open, maybe, just sift it in there a little bit. Maybe go a little easier, like maybe it's, just somebody just wants the hell out. They need to get the hell out. Maybe it's somebody that just accidentally put an order could cancel. These orders can cancel. But I mean, right now, you're wondering why that's trading down. You see 128,000 to sell. It's like, oh crap. Pre-market traders like, that's going to open low if that order holds.
Yeah, definitely.
And if they're also doing that pre-market, do you guys think that there's also possibly somebody's front running a bigger order once the market opens?
I mean, there's always that potential that some of these orders could be manipulative, that they're putting in there because they know they can cancel them. That would be illegal if they were doing that. Like, I mean, obviously there's front running going on for sure. I mean, everybody who's front running is legal. I mean, in this market, I see the order there, 129,000 shares. That's completely legal to look at this and say, I think it's going to open lower. I'm going to sell this down 7 because I think it's opening down 10. I mean, that's why the stock is trading down 7 points is probably the main reason. Maybe there's a downgrade or something that I'm missing too. But I mean, I see those 2 orders and I'm like, that's going to knock it down because, all your traders that, are obviously got the feed, look at this and say, if that order holds, it's going to open a lot lower.
All right, let's go. Let's preview the big dog, the big stock here. Netflix reporting after the close. Christian, you got a preview for us?
Preview, we've got an implied move of 8.8%. That gives you a range from where it closed on Friday, about 782 on the downside to 934. I always tend to look for these earnings reports, like what historically, how Netflix has responded to its previous quarters. If you look at the last 10 quarters, it's pretty much very close to even. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9. I think it's gone up 6 out of the last 10 quarters, and the stock does move. Last quarter, the stock went up 11%, but again, it's very back and forth. The previous quarter was down 1.5%, then down 9% on earnings. So I think the pricing it right where they should be, right around a little bit more than an 8% move. So I might be looking to play this one to the long side, given that I don't think Netflix is going anywhere, and I do think it's going to come in from the highs. I would not be going long Netflix if it was sitting at the highs, but the fact that it was trading, whoops, I got the wrong stock up. Given that the stock was trading at 920ish and is down to 850, I might be looking at doing maybe some type of a long call spread for this. What do you guys think for Netflix?
A little lower bar coming in to Christian's point. Fundamentally thinking about it, I mean, Netflix is kind of still firing on all cylinders, getting into the sports, doing so many other things that they've done well. I mean, is the Tyson fight in here? Question. Is the Tyson fight numbers in this? That's question in the chat too, because we know there's going to be big pops, from obviously everybody that's picked it up and subscribed just for the Tyson fight. Is that in this quarter? Are we I think?
Yeah, I think so. The reason I think so,
is,
because they're looking for a Q4 net, add of 12 to 13 million. And then for Q1, they're looking for 5 to 6 million. There also is a little bit of debate on the dollar impact, foreign exchange impact. And focus is always on the revenue guide, and increase in sports is definitely a boon to it, and they're a unique asset out there. They're really taking the media by the horns.
I'm just looking. So the fight was November the 15th. So it happened November the 15th. This is for the quarter ending December. I think it is going to be in this. I think the Tyson fights, we have to verify that if the Tyson fight numbers are going to be in this quarter or it's the next quarter. I think it's this quarter. Brent's verifying it too. So, I mean, that's, another reason to think about. The obvious stuff gets missed, man. The obvious stuff sometimes gets missed by the street. I mean, maybe they've confirmed. Brent says it is in this quarter. So this data, obviously a lot of people jumped in to watch that Tyson fight here. Did they subscribe and unsubscribe right away to get it? Maybe. Maybe some people stayed subscribed, but I don't think it hurts. So I kind of like your setup, Christian. Just thinking about, logically through it, that maybe Netflix beats pretty good here.
All right, that's it. Wow, what a round trip, man. We have been all the way under 6,000, back up near the highs of the session. 60, 63.50 is where we're trading. It's up 30 handles. I got two highs of the day for you, folks. Then that crazy overnight session on Sunday and Monday, we traded up to 78.25. So that's 15 handles away. And TradeStation will correct this, but if you've only been watching 6 p.m. last night, the high is 70.50. But folks, right back up at the rating range and right back up near the all-time highs. So
I want to update the imbalances for you here. There are some big institutional money pushing price around here before we go. Pfizer 200,000 to buy, ExxonMobil 100,000 to buy, Halliburton 147,000 to buy. Walmart 137,000 to buy. These are big numbers for a non-expiration day. That's why I'm shouting about Wells Fargo. I'm long, full disclosure, 108,000 to buy. And then again, Goldman Sachs and Morgan holding those huge sell imbalances, 137,000. It grew a little bit, the GS1. Morgan Stanley shrunk a bit, 379,000 to sell on the open. Again, this information comes from the NYSE floor. The numbers start coming out at 8 a.m. They continuously adjust as new orders come into the market. So again, we still have 24 minutes of orders to come in. So these numbers could change. But right now, it looks like some big institution money pushing the opening prices around on some stocks.
Yeah, just quick notes on Goldman Sachs is not even at the low from Friday, which was 613. And so you can look at that level if you want to, if they really think they're going to pound it. And with this much of a lower open, I'd look at resistance at 625.94. That was your all-time closing high price on Friday. And same thing with Morgan Stanley. Boom, boom. Let's check good old Morgan Stanley. The low, still $2.50 off that low from Friday of 134.54. Tomorrow we'll be joined by Kevin Merritt, managing director at Wedbush. He'll be joining us at 9 a.m. So you'll have a good hour of us before Kevin comes on at 9 a.m. Folks, if you have not been getting our daily newsletter brought to us by the one and only Brett Slava, recaps the show, I got a lot of emails from people telling me they love the update because what they actually do is sometimes they're in their car, Dennis. People are in the car listening to you rant. And so they don't get a chance to take notes like Jay Rice. So they like to see what they have. So I'm going to put the link in there if you're not getting that newsletter. Also, that if you sign up for that, you get some information on some exciting new things happening in February. So thanks for joining us here on Pre-Market Prep. Everyone have a good Tuesday. Okay, we're off.